This is Christopher Lewis from the dailyforex.com trading desk, and I'm looking for the upcoming February 20th forex session at the Euro US dollar pair. It is certainly the one that everybody pays attention to the most these days. It is also one that is giving a lot of traders absolute fits and headaches out there. The Monday session will see a meeting to decide whether or not to dole out the second bailout for the Greeks, and as such could produce fireworks. But looking at the chart as it is presently, we can see that we have been consolidating in this area, roughly between the 132.50-ish area and 130. 130 extends down to 129, so as I look at this chart, I can see that we are pinging around in this area. Interestingly enough, though, the Friday candle did stall and not reach the top of the market and form a shooting star. Quite often this will happen and predicates a breakout, in this case to the downside. Of course, it's a little early to call that, and with the potential for fireworks on Monday, it's definitely risky to go ahead and short right away. The top of the range is at the 38.2 retrace from the massive move down starting in October. So there is precedent for this to be some type of resistance anyways, and as you can see previously it was support and resistance a couple different times, so not exactly a surprise. 130 being a large round number, of course, creates a buffer. So currently I see this pair as being very noisy still, and until that meeting is over with, we really don't know the variables that we're going to be dealing with. If they choose to not give the Greeks the money, which is very unlikely, but if they did, more than likely the euro would come undone. The true power in the negotiations, contrary to most people's belief, are actually going to be the Greeks. Because if the Greeks don't get the money to pay off the banks and everything else, well, guess whose banks get beat up? The Germans, the French, etc. So essentially, they're not trying to bail out the Greeks, they're trying to bail out their own banking system. And put in those terms, it's hard to believe that they won't get the money. However, that doesn't mean that Monday won't see some type of delay tactic. That seems to be the way it is with European negotiations, and as such, we could see negative bias at that point. My personal feeling is that Europe has enough problems to go around that any surge from here will more than likely turn out to be a selling opportunity at one point or another. I would be watching the 120 or 132.50 area, excuse me, for some type of resistance if we do pop a little higher, and of course 135, which is just above the 50% retrace. So on the balance, I'm actually pretty bearish to the euro, but we have to wait till this meeting's over with and see what we've got going on. If we can break below the 129 level, we more than likely will run down to 126.50 or so, which was roughly the bottom, and of course if that breaks, we could go much lower. But the euro, I should say, has been very resilient over the last several months. Having said that, it's hard to beat it down, and we could be in a short-term trading environment for the foreseeable future.